looking at some interesting news in Tesla right now. So Tesla is actually the belle of the ball today. They've been invited to the S&P 500 and stocks rallying. So I'm gonna actually share my screen real quick so I can show you exactly what I'm looking at. So Tesla, market is up $45 this morning. Stock's trading around 453 right now. Like I said, this is in the face of futures down overall in the NASDAQ and S&P 500 index. But with Tesla up on the idea that it's being added to the S&P 500, typically these fund flows mean people have to buy the stock because they track those indices. So that's the predominant reason why we're seeing this rally. But it also validates Tesla overall as a company here. So what are some different ways to play this? And I'm going to look at the option chain right here. So I am looking right now at the, let me just get my annotate. So I am looking at the stock price right now, $453. So right now in the December expiration, 31 days out, falls around 65. It's a little higher than it was yesterday. It's a couple clicks here, but we have seen some movement. So there are going to be two different ways we can think about playing this. And the first what I want to do is I want to do a basic call spread. So if we think Tesla is going to continue to rally, a simple way to play this through December would be to buy this 455 call. Looks like it's trading around $33 right now. These are heavy stock option prices. So 33 bucks for an option that expires in 30 days, that you need to see a lot of movement for that to be profitable. But if we want to offset that, we might sell something. So I'm looking to buy the 455 call and then sell the 465 call. So you got the 455 call right there that I'm paying 33 bucks for and collecting $30, $29.65 on the 465 call. So that gives me a total price on this trade of around 4.25. So if I'm looking to pay around 4.25, what is my max possible gain here? So my max possible gain on this, I'm gonna throw this in our what if scenario. And by the way, this is using TradeHawk. It's a Tradier product. Traders are brokers here at Harvested Financial. It's an amazing tool for modeling out sort of what if scenarios, overall getting kind of the lay of the land for how you expect your stock price to perform. So we are looking at, how you expect your options to perform against different stock prices. So right now we paid around $4.10 for this call. So a debit, we had to outlay $4.10 times 100 for every contract that we do. So that's going to be our max loss. So we're going to see our max loss all the way down here at around $400. So no matter where the stock closes below this level, max loss of $400. On the upside, we actually see a max gain of $578. So the way we calculate that max gain is we look at the difference between spreads. We sold the 465 call and we bought the 455 call. So there's a $10 range there for our max profit. And that max profit, we have to take the $10 difference between strikes and subtract the amount we paid. So we would pay $4.10 for something that could be worth at most $10, giving us the gain of $578. Given the slippage of execution, our max gain of 572 and our max loss of 422. So where does that max gain occur? Well, I'm looking right here at that break-even point. We need to see stock get over 460 for us to break even. And actually, we really start making money once that's north of 462. It then caps out above 465. So, we do have a defined risk here. We have a defined downside loss of the amount we paid and the upside potential, should this stock continue to rally. Now, real quickly, I'm actually going to show a scenario that might let us leverage this even more. So we saw what a simple call spread would look like in Tesla. But now I'm going to show what a 1x2 looks like. So this is going to involve selling the 455 and buying 2 of the 460. So the cost on this trade, I'll show you, is $30. So it's actually a little more. It's $31.15. So we expect to outlay around $31 for this trade. So that's a lot more capital up front, and that would actually also be our max loss, because the debit that we pay to enter the trade is that $31. Now, why would you want to do that? What are you looking at here? I'm going to throw this in my what if scenario. Widen the price range here. So that gives us real upside potential should Tesla continue to rally. So if Tesla sits right here at 460, it's actually trading down, I believe, to closer to 455 right now. We're going to see that loss. So we're going to see a pretty hefty loss of that $30 a contract times 100 shares. So that's $3,000. However, if Tesla does rally, we now own 2 of those calls. So for every dollar Tesla ticks up, we really start making money here. Our break even is going to be about $30 above where we are now, because you need to overcome that entire $30 premium that you paid to get into this option. So right there, that break even is going to occur around 490. So approximately $31 north of where that 460 call that you're short, above that strike price. So if you really think this is going to continue to rally, putting on a 1x2, you can offset the cost, but you really get some positive upside. Should stock jump, that's if we see more than a 10% increase between now and December, certainly possible. We really start to make money. We know Tesla can move at, I think the implied vol right now we saw was around 60. 67 actually. So 67 implied vol, a little back of the envelope math, means I'm going to divide that by 16 because 16 is the square root of 252, which is the number of trading days in the year. Volatility is inversely proportional to time. So to get the average daily move, I'm going to take the 67 divided by 16. I get 4.1% on a $462 stock. Those are $19 moves every day. If we see a couple of those $19 moves on any given, in a couple days in a row, I should say, we're really going to see some profit potential here should Tesla continue to rally. So that right there is your daily bread. We are looking at Tesla because it was recently added to the S&P 500, or I should say announced that it will be added in December. So a lot of positive action in the stock on that news. Checking out some option spreads for how to play that, whether it's a call spread, whether it's a 1x2, you have lots of different ways to profit from a potential future rise in Tesla. So thanks everyone for sticking around. We're doing the daily bread here every morning at 8:35 Central, 9:35 Eastern. Tune in for trade ideas. We're going to walk through scenario analysis, and we're going to look at some awesome ways to make money with options. So thanks for joining us. Harvestedfinancial.com. We are still in our beta phase, so we are offering discounted rates, $5 minimums on all accounts for the next 3 months. Come and join us. Check us out. Derivatives are for everyone.